I'm Jared Carpenter, and this is More Than Blockchain. On this episode, we're going to talk about the super simple idea that if you don't own Bitcoin by now, you likely will by 2025. And this is due to two things, FOMO and math. And FOMO and math are really kind of the focus, and they're really just one thing. They're both about missing opportunities. They're both about opportunity cost. And I tweeted this the other day, and I wholeheartedly believe it. The idea that the opportunity cost of ignoring Bitcoin and basically not taking the time to learn about it, not taking the time to even invest $5 in it, is compounding, or that basically the negative opportunity cost is compounding at the same rate that Bitcoin is appreciating. So if Bitcoin goes up 50%, your ability to gain from the network, at least financially, has gone down 50%. Because now every dollar that you put in is worth half than if you would have put it in before it went up 50%. So this is the fascinating thing about opportunity cost. And let's start with FOMO. FOMO is a fascinating thing. When you talk to most people, whether you're in Bitcoin or you're not, ask somebody, when did you get into Bitcoin? And they're likely going to say they got in 2013, 2017, or 2021. And this is because as price appreciates, FOMO also grows. In 2012, you had the halving. In 2013, we saw price appreciation. More people came in. 2016, there was the halving. In 2017, price appreciated. That's where yours truly came in. I am a proud member of the class of 2017. In 2020, there was the halving. In 2021, there was a huge price appreciation, and that's where many people came in. 40% of new wallets were created on the Bitcoin network in 2021. That is an absolutely fascinating stat. So we are now 6 weeks away from the halving. There will be a halving in 2024 of the block reward for the miners. And by 2025, we're going to have more price appreciation. And with more price appreciation, we get more FOMO. There will be more attention. So if you don't own Bitcoin today, you likely will over the next 12 months as we finish out 2024 or as we get into 2025, just due to that FOMO, just due to that opportunity cost. And the other part of it is math. Now, we talked about earlier the opportunity cost compounds as quickly as Bitcoin appreciates. And all that's to say that if Bitcoin's at 50,000 and you decide not to put in your $100 and you wait till it gets to 100,000, when you put in your $100 has half the value it would have had if you were to have invested when it was at 50,000. So ignoring Bitcoin has the opportunity cost that is equal to the price appreciation of Bitcoin. So if you wait for Bitcoin to double, you are basically having your financial ability to gain from that network appreciation. That is a fascinating part of this that really leads people to start to say, okay, if this thing is just going to continue to go up, what am I waiting for? Because if I put in $5 today, as opposed to putting $5 in 2 years down the line when it's doubled, it will actually have a much greater impact on my overall final return on investment, or ability to protect my purchasing power, or ability to build maybe even generational wealth for my family when before it was seemingly impossible. But now that I have this asset, which is growing at, well, the first 15 years, it grew at about 180% compound annual growth per year, or CAGR, which is absolutely ridiculous. Go do the math. That is freakish. But over the next couple of years, let's say even if it grows at 50% compound annual growth per year, that is insane. And so every year you're missing out, you're having, literally, not part of the Bitcoin halving, but you're having, you're cutting in half your ability to take advantage financially from that opportunity. And this is math that people are really starting to do, whether they say it out loud or whether they do it subconsciously. But it's like if you put in the $100 at 50, or you wait till it gets to 100,000, that $100 is either going to be worth double or it's going to be worth half, depending upon the decisions that you make. So ignoring the network is actually quite costly. And so this is the episode I just wanted to make because I think it's really fascinating what's going to play out here. Over the next couple years, we are going to see bigger and bigger money come in. We're going to see more and more nations that are bigger than Bhutan, who's been mining Bitcoin, and bigger than El Salvador, which has made it a national currency with the dollar down in El Salvador. We're going to have much larger countries that are going to hop on this. And once an oil nation, once an OPEC country, once any one of the nations that dominates oil around the world, once they dive in and they start taking their oil profits to put into Bitcoin, we are going to be on a completely different trajectory. And that is on the road to a $1 million Bitcoin. It's also been said by financial planners in the United States that local family offices that control around $8 to $9 trillion are going to start allocating 1% to 2% of their portfolio for their high net worth individual clients or their middle class clients that they basically control their wealth for. They're going to start to put those into the ETFs. And that is going to bring around $200 billion, $150 to $200 billion into the network. And that will obviously have a very, very significant effect on the network and Bitcoin's overall price appreciation. All that is to say, by 2025, more and more people are going to be hopping into Bitcoin. It is an exciting time to be around. I'm making this 6 weeks out from the halving, and it's just surreal to be here. Because right now, as I record this, Bitcoin's around $69,000, and this episode is around Bitcoin, but it could also apply to any of the other cryptocurrencies like Ethereum, which will likely have ETFs by the end of this year. Ethereum is at around 3,900 with its all-time high around 4,500. Ethereum and Bitcoin are around their all-time highs, and right now no one's talking about it. I almost kind of want to whisper, right? But by the end of this year and as we get into 2025, it is going to be a hot topic. It's going to be interesting to see how this plays out. The psychology around Bitcoin and around crypto, where you have these 15% daily swings, is wild. It is absolutely wild, but that is what happens when you have probably the closest thing we've ever had to a global open market for an asset that trades 24/7, 365, or 366 because this is a leap year. Anyways, wanted to make this video. Please go ahead and follow us on social media at More Than Blockchain. If you found this interesting at all, please share it with a friend, colleague, or family member, especially if someone's kind of like on the fence and they want to hear about the FOMO and the math behind why they're likely, if they're on the fence now, probably going to jump in either by the end of this year, before 2025, or in 2025. No matter where you're listening, please go ahead and subscribe to the podcast, whether that's on a podcast platform or you're watching on YouTube. Thank you once again for checking out this episode of More Than Blockchain, and I will see you next time.